Let's talk about something that's probably on a lot of our minds. We're going to tackle a huge question today. In a market that just feels like it's designed for chaos, how do you actually build real, lasting financial stability? I mean, that's the bottom line question, isn't it? Seriously, take a look at your portfolio, your savings, that retirement fund you've been building. How secure does it all really feel? Because history has shown us again and again what goes up, well, it can come crashing down. And when it does, it comes down hard. That brings us to the first thing we really need to get our heads around: market crashes. They aren't some surprise if they happen. Nope. They are totally predictable when it's a pattern, a cycle that just keeps repeating. And you know what? Understanding that pattern is the very first step to actually protecting yourself from it. We don't even have to look that far back. Just think about it. 2008, the great financial crisis. More recently, 2021, the COVID-19 crash. And these weren't just little dips in the market, right? These were massive seismic events that literally shook the entire global financial system to its core. 50%. Just let that number sink in. During the 2008 crisis, that's how much so many people watched their investment portfolios just evaporate. We're talking half of everything they had spent their lives working for just gone. And the human cost of that, it was absolutely devastating. Lifelong savings, poof, vanished. Retirement plans completely shattered. You had people who were millionaires one day and literally middle class the next, just like that. In an instant, that feeling of financial security just disappeared. Then you fast forward to the start of the COVID panic, and guess what? It happened all over again, a 35% drop. It was just another chaotic, stomach-churning reminder of how unbelievably volatile traditional investments can be. So this gets us to the real heart of the problem here. See, the danger isn't just the crashes themselves, it's the market's total unpredictability. The fact that the numbers, well, they often just don't make any sense. I want you to think back to 2020 for a second, okay? Businesses were shut down, economies were grinding to a dead stop. The entire world was in lockdown, and yet the stock market was soaring. It was booming. I mean, somebody please tell me how. Does that make any sense at all? How? That right there is the fundamental issue. It exposes this massive disconnect. It's like the stock market's performance and the actual health of the real economy are on two totally different planets. And when those two things don't line up, what you get is a really dangerous bubble of uncertainty for every single investor. When that bubble inevitably pops, and trust me, it always does, when the market finally corrects to match reality again, guess what's on the chopping block? Your returns, your money. And it always seems to happen at the absolute worst possible time. So all of this really leads us to two very different realities when it comes to investing. You've got one path, which is the chaos of the traditional market, and then you have another, a much more stable approach. Okay, let's break this down. Look at traditional investing. It's a total roller coaster, predictability. Good luck. It's up, down, all over the place, trying to plan for your future around that. It's pretty much impossible, and it leads to a ton of stress. Now let's compare that to a passive income strategy. The whole goal is different. You're aiming for a steady, predictable line. All of a sudden, planning becomes so much easier, and that stress level, it just plummets. So let's pivot and talk about the solution here. What this is really about is making a conscious choice, a choice to build your financial foundation on something solid, on predictability and stability, instead of on speculation and all that crazy volatility. So what is this stability solution exactly? Well, what we're talking about here is passive income. These are investment structures that are built for one main reason: to give you a steady, predictable return while making sure your initial capital is protected. So, think of things like real estate that generates rental income, or maybe private credit. The key is that the returns are based on actual contracts and real cash flow, not just on what the market feels like doing that day. The benefits here, they're basically the exact opposite of all that chaos we were just talking about. So instead of those wild, unpredictable swings, you get steady returns. Instead of making planning feel impossible, your financial future actually becomes clearer. And all of this, it just leads to so much less stress and a genuine peace of mind. All of it is backed up by the security of knowing your capital is protected. Okay, and this right here brings us to what might be the single most important point of all. It's all about shifting your focus, shifting away from the stuff you can't control and onto the one thing you absolutely can. This is it. This is the key takeaway. You cannot control the wild swings of the market. You can't control global events that send everyone into a panic, and you definitely can't control how other investors are going to behave. But you have 100% total control over your own strategy. Look, let's be crystal clear about this. Market crashes are not going away. They're a permanent part of the system. So knowing that building a strategy that's focused on stability, well, it's not just a nice idea, it is your single best defense against all that chaos. So I'm going to leave you with this one question to think about. Take a hard look at your own financial plan right now. Is it designed to just ride the chaotic waves of the market, hoping for the best? Or is it truly built on a solid foundation of stability?